Today we're going to discuss setting up an accountable reimbursement plan and the things that you need to know. So let's start off by talking about what is an accountable reimbursement plan. And it is a plan that's going to follow our IRS guidelines for reimbursing employees and owners for out-of-pocket expenses that relate to the business. When we've got an accountable plan set up properly, the reimbursements are not going to be considered to be taxable income to the recipient or the person requesting reimbursement, while at the same time the business owner is going to be able to take a tax deduction for those reimbursements. One additional rule of having an accountable reimbursement plan is if for some reason there's money that's been advanced but the money was not spent for a proper business expense, the employee owner must return any money to the business. If you can get all these guidelines together, you're in a great place. We like accountable plans. We really try to encourage you to use an accountable plan. However, sometimes we have clients who may be using a non-accountable plan, so no receipt documentation is required. In those events, that's going to be a taxable event, and we will include those in the employee's paycheck. If you're an owner and you're having a non-accountable plan, that's a little bit different type of scenario, and we'll talk through how that plan may work for you separately. In general, we think the accountable plan is the way to go, and we highly encourage you to implement an accountable plan and use that for taking care of any out-of-pocket expenditures. So when you're running an accountable plan program, it's all about getting good records and having the documentation. So we want you to use an expense reimbursement form. It's just a cover sheet that your employees or whoever is needing to get reimbursed would use to summarize the type of business expenditures that they have incurred. We want them to be able to substantiate their expenditure, and we're going to talk about that in just a little bit. They're going to have to demonstrate that there's a business purpose, and they're going to have to provide receipts within a reasonable time period. Typical things that are going to be reimbursed are going to be travel expenses or mileage per diems if you're using your own vehicle for local trips. Maybe you're picking up some tools or supplies that you need, some home office expenses, maybe some cell phone, training and development, dues subscription, professional licenses. These are all very typical expenses, but this is not a complete list. There are other things that may need to be included on a reimbursement as well. So I mentioned earlier that there's going to need to be some substantiation of the items being reimbursed. And basically you're going to have to provide documents or other information that's going to reflect the time, the place, the business purpose, and the amount of expenditures. And all we're trying to do is just get together some documentation so that if you're ever audited, we've already got that in place. In lieu of using actual documentation for a reimbursement, you can also use the federal per diem tables for things like travel, meals, and incidental expenses, as well as mileage. You may also have a rule that says that if you've got a small outlay of $75 or less, they're not necessarily required to provide documentation either, or you can make the conclusion that you still want the documentation. We also suggest that you have a written policy in place, and so things that your written policy should include is going to be, hey, what's that time frame that your employees need to get documentation submitted requesting reimbursement? A year is a long time. Maybe they've got to get it submitted in 30 days or 60 days or 90 days. If you get that into your policy and they signed off on it, then that eliminates a lot of confusion or frustration. You want to put together a process for requesting reimbursement. Is there a form that they need to complete? Who do they submit it to? What do they need to be attaching to it? If they've gotten an advance on it, what's that process for returning any excess reimbursements or allowances? What kind of things are you going to be reimbursing for? And maybe more importantly, what kind of things will you not reimburse for? Is there a limit on how much that they can request to be reimbursed for? And if you have any preferred vendors, you can also set that as one of your rules around getting reimbursed. So that's a very quick overview of how an accountable plan works, how to put it together, how to make it operate. If you have any other questions, please feel free to reach out to us.